great.
Evening tonight. As I mentioned earlier, we have Alex Mashinsky from Celsius Network. He's a very intelligent guy, so I met him at CIS and been following his project. So he's gonna just tell you how horrible the banks are and how awesome his app is. And then we got from the Divi Project, I'm going to butcher your last name, but Nick. And then we have Andrew from NodeForge. So he's going to actually fill in most of the gaps. And so for those who want to start up masternodes, and he'll give you an explanation what masternodes are and how to utilize them. And with this service, he can easily, spin up a masternode without you, you don't need to know how to code, program, or be tech savvy. You just gotta click the button. So think jitterbug, it's just super easy.
People or depositors to earn a return, earn an interest, and we created a platform that basically allows you to unbank yourself. It allows you to earn return without using financial institutions. We basically use the blockchain and cryptocurrencies to bypass the banks and use these mechanisms to enable users to earn up to 7 times more than what the banks provide. It's done through an app. The app basically aggregates customers that have coins. The coins are deposited with us. We put them with Bitcoin, and then we lend them out. That generates interest. We pay 80% of that interest back to the customers or our depositors. And basically, since we launched about 10 months ago, we've done over $1.5 billion worth of loans. We've now have about $230 million worth of assets under management. That's coin deposits that were given to us by over 30,000 users from all over the world, so over 150 different countries. So the 3 basic services we provide are simple cash loans. So if you have Bitcoin and you don't want to sell it because you don't want to trigger a tax event, we can basically give you a loan against it. So you can still keep your Bitcoin, it goes up, you keep all the profit on that. But you can, in the meantime, get a margin loan, just like you would get against your Apple stock or Google stock or anything like that from Fidelity or anyone else. And we charge 4.95%, so probably a third of what other people charge. And you can earn coins, right? So basically, if you just deposit coins with us, you download the app, you give us your Bitcoin or Ethereum. We pay interest on these coins, and the interest is paid in Bitcoin. So you have more Bitcoin. Instead of, obviously, if you keep this on exchanges or other platforms, you're not going to earn anything. And the third service we have is called SellPay, where you can basically send coins to people without knowing or without them having wallets. So today, if you want to transact with somebody, they must have a wallet. You have to call them and ask them what address. Can I send you a test transaction? Check that they received the test, then send them the full transaction. It's just completely cumbersome. With SellPay, you don't need to do any of those things. You can just use their SMS or WhatsApp to send other people services. So all these 3 things that I just talked about are really mechanisms to create mass adoption. I mean, our focus since we were created was all about adding the next 100 million people into crypto, and we think that these are the 3 killer apps for crypto. So borrowing dollars against your crypto, earning interest right on your crypto, and the third one is enabling people who don't understand anything about private keys or public keys or anything like that to transact or join the community, by basically becoming part of what we all benefit from. These are the rates we pay right now. So these are some of the rates that you can earn on the different coins. Some of them are higher, some of them are lower. And again, you can just deposit these coins and earn the interest immediately. We pay interest every week. We calculate it every day, so you can withdraw coins at any time. There's no lockup or anything like that. So that's kind of like the high level overview of what we do, and let's do a Q&A. Probably gonna be more interesting than just me talking.
Awesome. Yeah, I definitely agree. So,
I think it's still muted.
yeah. Oh. Yeah, okay. There we go. Yes. All right, awesome. Yeah, great overview. So, yeah, I think a Q&A would be awesome. So that way people can really interact and have more of an idea of what the Celsius network is about. So if anybody's interested, there's a mic right here. You can just come on up and pose your questions.
I'll just add one more thing that we modeled ourselves after Costco and Amazon. We think, if you think of what basically banks do, they take our money, right? We give them a deposit, they take our dollars and they lend it to our neighbor, and they give us, basically, in most cases, they give us nothing, zero, but sometimes they pay us 1% for our money. But when they take our money and lend it to our neighbor, they charge us 25% on our credit card. So it's just not a very good relationship for the depositor. It's a very profitable relationship for the bank, and it's a very profitable relationship for the bank's shareholders. But the banks are doing a very good job for the shareholders, not a very good job for the depositor. So we model ourselves after Costco, and Amazon, which I think are very organizations that focus very well on their customers, right? They return almost everything back to their customers. And we think that that is really the opportunity of the blockchain, to become the Costco of the financial services. The idea is to create this container or warehouse, if you want to call it, that enables you to earn real return, again, 500-600% on your assets. That, again, the organization, Celsius Network in this case, is always acting in your best interest.
Awesome, great. Amir, right?
Yeah.
Okay, if you have questions, go for it.
Hi, Alex. It's Amir here. I have a question about the current volume that you can see on the exchanges. And it's IDEX and one other exchange that you could purchase Celsius tokens on right now. My question is in regards to the strategy moving forward. Are you planning to be on Binance or other major exchanges, or how are you planning to bring in more volume? Because it seems like the volume is pretty low right now.
Well, so we are going to be listing, I think next month, on a major exchange in June, you'll be able to basically, obviously, have a much higher volume on those exchanges. I mean, IDEX is not an exchange that we selected. They just basically are transacting because they have enough buyers and sellers. But when we list on the main exchange, the volume is going to be, I think, much higher than it is today.
And there's gonna be an announcement on your Telegram channel that we're gonna find out about it.
Yeah, we're gonna make announcements on our. It's probably gonna be on our website and on Telegram, so you're not gonna miss it. But just to be clear, you don't need the cell token to get a benefit from any of the services I described. It's not like you have to buy a lot of cell token to earn 6.9% on your USDC, right? Can you see my screen right now?
Yep.
Yeah. So for example, if you look at the stable coins that we offer, you can take the dollars, convert them into stable coin. We don't sell these coins, but you can buy them on an exchange or from Circle, for example, and you can earn almost 7%, right? That's 7 times more than your bank pays you. Yeah. And we do exactly the same thing the bank does. It's just we charge our customers 9%, and we give you 7% back, and the banks charge 25% and give you only 1% back. So you decide who you want to give your money to. That's really what this is all about. And you know, when people tell me, oh, the banks are so powerful, how are you going to win against the banks?
Good
And
question.
I keep reminding them that, look, the phone company used to be powerful.
Yeah.
And when we stopped using them, we started using Skype or WhatsApp or Google Meetup, all these phone companies had to sell, right? And the same thing is going to happen with the banks. If you stop giving your money to the banks, they're all going to lose their business, right? Their power comes from the fact that we give them our money for free.
Excellent, thank you. Anybody have any questions? Hey, all right. Come on down, sir.
Hello, Alex. My name's Mike, and I just had a couple quick questions for you. First was, I was on your website a few days ago, and I was looking at the different interest rates that you offer for different coins. I was curious, how do you guys calculate what interest is paid per to each of those various coins?
Yeah, so the interest really dictates, the interest tells you how much demand there is for this or that coin. So if you look at some of these rates go up and down. Like I can tell you that Monday we're going to be raising the rates on stablecoin because right now there's huge demand for stablecoins. I think it's going to go up to something like 8%. And that is because we're making more money, so we can charge 11 or 12% to the hedge funds and customers that we have. So we immediately start paying more to our community. So basically, all we do is we take the rate, and what we publish is what we already earned last week. So this rate that you see here has been earned already last week. So this week we already earned more, so we're going to publish the rate of what we earned this week, which is probably going to be, like I said, around 8% for stablecoin and so on. So the rates go up and down. I mean, really, we just take 80% of whatever we make and we publish that every week, right? And that shows up. Like if you gave us USDC, we pay you interest in USDC. You gave us Bitcoin, we pay you interest in Bitcoin. Give us Ethereum, we pay Ethereum. So it's a very simple process. And like I said before, you can withdraw at any time. There's no penalty, there's no fees, there's no membership fee. If we don't earn anything, then we will pay you zero. And if we earn a lot, we'll pay you most of it back. Ask your bank, next time you make a deposit at JP Morgan or Wells Fargo, just walk in and say, hey, I want to know where my money goes to. I want to know how much you guys make on it. And I want a weekly report of everything that's happening and weekly deposit of a distribution of whatever you guys made right into my account. And I want to withdraw it at any time. I don't want to lock it up for 2 years to get 2%. You know? Let's see how that goes. You know?
So next we have Nick from the Divi Project. He's going to wow you. So
But I really want to talk more about how you can actually make your PC work for you and how to evaluate projects in order to make money with cryptocurrency and hopefully avoid getting scammed or investing in the wrong projects. So the gig economy has exploded over the past few years. Things like Uber, Lyft, Postmates, Fiverr, and Freelancer and sites like that have empowered people to basically make a side income with their computer or with their car or with whatever. Actually, more than 57 million Americans are part of the gig economy, making a side income in this way. Some people even use it as their primary source of income. I'm sure you guys have met Lyft drivers that drive Lyft for a living, right? Cryptocurrency is another way that you can actually earn money on the side or as a primary income. I'm going to talk about the four main ways here: mining, trading, staking, and masternodes. And each one of these comes with their own set of caveats. And bet it, you'll run into one, it's power hungry. The yearly Bitcoin power consumption is estimated to be that equivalent to that of Ireland. There's a relatively high cost in terms of your initial upfront cost, getting that equipment into your house, and upgrading the equipment, making sure that it's in line with who you're competing with. and it's relatively inefficient. So that the low throughput actually means that you'll have to be upgrading your equipment more often, and you're competing with massive operations at this point. There are warehouses in China, there are warehouses all throughout the United States and Europe that will destroy you if you're trying to mine Bitcoin. So it's really not so much a hobby anymore for the individual user. Trading cryptocurrency, I know plenty of people that have been successful in trading cryptocurrency, but it is extremely stressful. A professional trader is spending probably 40 to 60 hours a week in front of their screen, probably losing money. It's really difficult, and you're competing with robots. So trading bots, algorithms, quants, etc. that, again, will destroy you in your efforts. This isn't to say that you can't be successful trading cryptocurrency, just be aware that it is wrought with risk. And finally, taxes. We talked about this in the last presentation. Capital gains tax is what, 50%, something like that. So any gains that you do make are going to probably be eradicated by you cashing them out. And then we have staking and masternodes. Staking and masternodes do offer a much lower barrier to entry. The technical requirements, again, are much, much lower. They don't require as much power. In fact, staking and masternodes require about 99% less energy than mining. So a lot more eco-friendly that way too. The lower risk, of course, that low barrier to entry plays into this lower risk, but also the upfront cost is generally lower, and you're earning cryptocurrency more frequently, and so basically you're averaging out your initial investment. And then you can actually, and this is not tax advice, you should definitely talk to a tax attorney or an accountant before taking this advice, but generally you can consider what you're doing as work. So you can actually, same with mining, your equipment and where you store your equipment, etc., can actually be, in some cases, written off on your taxes. And the rewards can be taxed as earned income rather than cap gains. So does anyone know actually what a masternode is? A couple people. So essentially it's a full node carrying a complete copy of the blockchain. A node is just a computer or server that verifies and secures the network's transactions. So basically it's a computer that runs a program, and for running that program you get paid a little bit of cryptocurrency. Similarly, staking is, again, a full node, but it differs in that it actually adds new blocks to the blockchain. Both of these methodologies support the cryptocurrency ecosystem and network that you're participating in, and both pay out different rewards based on whichever network you're participating in. The tokenomics obviously vary pretty wildly, and that's why it's important to research into each project that you invest in. As far as opportunity goes, so right now, at least when I made this presentation, the crypto market cap was $243 billion. Anybody know what it is at this moment in time? No one offhand?
More than that.
237?
Somewhere around that.
Somewhere around that. It's close. Apple, in their last investor call, cash on hand had $245 billion in cash. So the actual crypto market cap is around the same amount as Apple, the largest company in the world, has on hand at any given time. The masternode segment of the cryptocurrency ecosystem is only $2 billion. So that's less than 1% of the overall market cap. If you can't see an opportunity there, you might be blind. So, just kidding. My point being, you are very early. If you're in this room, you're making a great decision as far as making a step towards financial freedom. Cryptocurrency, while it has skyrocketed over the past 10 years or so, is still extremely young, and you're in a really great position if you're just getting into it now, or if you've been in it for a while. So how do you choose an investment? In my opinion, fundamentals are key. A lot of people try to read charts and do technical analysis, and that does sometimes work in many cases. However, crypto is a very emotional game. There are a lot of inexperienced investors playing this game, and for that reason, it's important to look at the fundamentals of projects because the prices are just going to go all over the place. There's absolutely no way to really predict, but you can invest wisely based on certain fundamentals. And no matter what I say here, it's always important to do your own research. Don't take what anybody on YouTube has to say seriously. Always look into whatever anyone's saying and make sure that you're making the prudent decision for yourself. First thing I always look at when I'm looking at a new crypto investment is their team and their community. The team has to be accessible. I don't want to see, you know, some hacker image in their team profile page. You want to see a team that has LinkedIn pages, has Twitter pages, etc. And it's nice if they have some past successes. You know, if they've been at major companies or if they've started companies that have done well, even if the companies fail, if they have some experience with startups, etc., that can be really, really helpful, especially in a volatile market like cryptocurrency. The community should be active. Just because somebody has 50,000 followers on Twitter doesn't mean that there's 50,000 people owning that coin or participating in that coin. Look at their engagement. 50,000 followers with 2 retweets, that's all fake, right? All the followers are fake. I think most of us probably know, right? And so it's really important to have that active community. A strong advisory board is always a plus. People that are already in the crypto space or within tech. And then communication, right? Are they putting out blogs? Are they updating their website? These types of things show that they're actually attempting to build something rather than raise a bunch of money and disappear. Then history of success. So actually right now is a great time to start evaluating projects because we just are pretty much leaving a pretty extended bear market. Some of you may think we're still in the bear market, but I feel that we're starting to emerge from it. So did the project survive the bear market? A lot of projects failed. Even the $100 million ICOs, some of them are gone. So that's a really important indicator. Have very consistent updates to the code base and the roadmap. You can go on their GitHub. It's important to realize that GitHub is not always a metric that you can take for granted because some teams do develop privately and then they'll push updates all at once. So it's, again, you can go into their community and see where the progress has been going, but it's still a good metric. And how's the team dealt with adversity? So, for example, my project was a victim of the Cryptopia hack. Is anybody familiar with what happened there? Big exchange got hacked. A lot of our users were on there, and we had to recover pretty quickly. So we quickly found a couple exchanges to get on, and actually as of tonight, we just announced that we're going to be on a much, much larger exchange called BitTrue, which does a couple $100 million in volume. So we're very excited about that. But during that time period, we were getting absolutely destroyed because there was absolutely no liquidity for our coin. So the few small exchanges that we were still listed on, if somebody dumped, the price was going down 20, 30, 40%. In order to get through that, it took some creativity. So that's a good thing to look for. Utility and purpose, extremely important. There are a lot of blockchain and crypto projects out there that do absolutely jack shit. And it's really important that a project is at least trying to solve a real problem. They may not have the solution built today, but if it's on their roadmap and they're making progress towards it, that's a good indicator. Is the project a genuine use case for blockchain? So just because you put blockchain in the name doesn't mean that it needs blockchain. Some things are better to be on a distributed ledger or just a regular ledger for that matter. And is their business model scalable? That's for you to evaluate and can be really difficult to see, especially on the onset. Finally, return on investment. I mean, we're all investing to make money, right? So how long will it take you to get back your initial investment? And then how long will it take you to see 10x, 100x? When venture capitalists invest in a project, they're looking for a 10x return. They won't even get out of bed for less than that. They may never see that. In fact, they lose on most investments. But if they can at least see the 10x, there's no point. And is there any liquidity? You have to look at volume on the exchanges. The order books are a good thing to look at as well. This is all going to tell you whether or not you can sell or buy more into your position. If there's really low volume, you may be stuck in that position for quite some time. And that may not be a bad thing for you depending on your investment strategy, but again, it's something to look at. So, as far as masternodes and staking coins go, they're a really great investment because, why? They're generating more coins for you all the time. So why wouldn't everybody be hosting these, right? Well, there's a pretty massive problem, and that's user experience. In cryptocurrency, it seems like user experience is almost ignored in a lot of the cases. And this is being heavily improved, which is really nice to see, but it is still pretty much a massive issue. I'm going to show you some of our competitors in the masternode space. And you can see they're actually turning away users by saying setting up your own masternode can be hard work. This guy assumes basic knowledge of PuTTY and Linux. If you read all the considerations and you still want to go forward, etc. They're basically saying don't try this unless you have distinct technical knowledge, computer science background, etc. I feel like that's not a good solution for mass adoption, and we're going to stay at this 1% of the market cap unless we improve that. And that's what Divi Project has done. Huge shameless plug. So we created the first truly one-click masternode deployment for the cloud. You retain control of all of your keys, but you can actually deploy to the cloud just as easy as you would set up an account online. And this is a quick video that's been heavily sped up that shows you that with just a few clicks, you can subscribe to our service and deploy your masternode. The lower masternodes are $10, and the higher masternodes are $15. So we have 5 different entry points for our masternodes, which kind of gamifies the system and encourages people to hold on to the coins, which has really stabilized our price, as we've seen.
Bitcoin is what's called a proof of work algorithm, which is the blockchain is secured by doing a lot of hard work. You get specialized computers called ASICs, and they do a lot of mining, a lot of hard math, and that helps protect their network against attack. It's kind of a constant arms race, right? Somebody gets a fast computer, they participate in Bitcoin mining, they get some coins, people get faster and faster computers, and this arms race continues until you've got entire hydroelectric dams running farms full of specialized equipment just to keep Bitcoin going. It's an untenable situation. So people have been innovating in this space, realizing that we can't divert all of the world's power towards mining Bitcoin, and they've come up with a new algorithm called proof of stake. The difference, and I won't go too out into the weeds here, but the key difference is instead of using specialized hardware to do all of your mining work for you, you stake the value of the coins against the network itself to help protect from being attacked. A really easy way to put this is, in order to attack a proof of stake network, you would need to own 51% of the assets, at which point you're attacking yourself. Why would you attack a network that you own a majority stake in? So that's kind of the logic behind it, right? The industry's shifting towards proof of stake and fast. If you look at a top list of all of the different currencies available on CoinMarketCap, like 99% of them are proof of stake or hybrid proof of stake, proof of work. Really only Ethereum, Bitcoin, and a select few others are proof of work at this point. And even Ethereum is moving to proof of stake sometime this year, is the theory. The industry has recognized that this long-term sustainability isn't working out, which is why they're all moving to proof of stake. And I think we're going to continue to see that trend, which is why Node4j is focused on proof of stake as kind of the future of cryptocurrency. Who knows, maybe there's some whole new algorithm people will come up with that will knock the socks off of proof of stake, but at the moment it works pretty darn good. So some of the benefits of proof of stake, we talked about a little bit, but one of the big ones is no big upfront investment in an asset that's just going to depreciate, right? You don't have to go to Bitmain and buy yourself an Antminer that costs $5,000 or $10,000, only to find out they released, Bitcoin Miner version 2 that is now twice as fast as yours, and yours is worth $45 on eBay. So no more investing in hardware that is necessary to mine these coins. Instead, you're just running software on a computer. Could be computer, your laptop or desktop. Could be a computer in the cloud. It doesn't need to be high powered. Just a little bit of processor, a little bit of RAM, and all of these different proof of stake machines together form a network that helps protect and run this proof of stake network. Another great thing about proof of stake is because it requires committing collateral up front, it stabilizes the value of the price somewhat. It's a double-edged sword. On one hand, proof of stake encourages holding these assets, which can cause the price to be stable. On the other hand, it also discourages price velocity, so you don't see people spending it or using it. They really want to hold on to it. It makes everybody a hodler, right? Can be good for the price for the short term, but unless you find a good use for your proof of stake currency, eventually it's not that valuable. People realize that your market volume is very low and something's wrong. Another thing about proof of stakes, they work off of a recurring reward model. So when you get a proof of stake currency and you either stake it or use it to run a masternode, you're gaining something like dividends. If you put 1,000 in and you run it, you'll get maybe 2 or 3 coins every few hours, every few days, however they decide to set up their algorithm. This does a couple of nice things. For one, if the asset appreciates over time, these proof of stake currencies that you are holding, your 1,000 whatever coins, appreciate in value naturally. They're worth more than they used to be. But similarly, even if the price remains flat, you're gaining dividends on the amount that you put in stake. So you're still gaining some earnings, even if the price is flat, even if the price goes down. So it's a nice way to counter some of the price volatility by ensuring that you're accumulating assets that are also accumulating value over time. Finally, the operating costs are, in some cases, negligible. We talked about $5 and $10 masternodes for some of those. It doesn't require a lot of horsepower, meaning it's not a lot of money out of your pocket, meaning your operating cost is low and your earnings stay high. Best of all, everybody loves it. It's environmentally sustainable. We're not, using all of the world's energy to run these silly little networks anymore. It's, we can run something like a global infrastructure system for finance without using all of the globe's power to do it. So, just a quick little recap of kind of masternode staking and proof of stake versus mining and proof of work. We talked about the upfront equipment costs. Masternode staking generally has none. Proof of work, your upfront costs for hardware are high. Operational costs are low for proof of stake, just a couple of bucks a month in general to run your masternode server, or maybe even less. Maybe it's just power if you're using your computer at home. Versus mining, where you've got to, it takes quite a bit of energy, and you've got to find a place to host this equipment. Most people can't have a hairdryer running in their house 24/7, so there's some challenges there. Asset appreciation, those dividends that you're gaining from proof of stake, you don't necessarily gain from a proof of work algorithm. You have to fight and win against others to gain assets with proof of work, whereas proof of stake is gained passively. Sustainability, high, you're not burning all these assets to keep proof of stake going. Is a drone taking off out there?
They're on to us. The government coming.
And remote hosting, you can both do that, but even remote hosting with a proof of work algorithm is difficult. You have to find some data center somewhere that's willing to take your expensive piece of equipment and plug it in and pay for the power and probably take a large chunk of what you would be earning from running that hardware in the meantime. So, with all of this, we developed Node4 in mind. The one big barrier to entry with proof of stake that Nick talked about is, aside from needing to acquire the assets up front, which is kind of the case regardless, and usually what most people are interested in doing so they can speculate on some of these currencies, the technical barrier. How do I set up a server? What's Linux? How do I run these scripts? Am I doing it right? Where's tech support? A lot of times the projects that are involved in proof of stake are so buried in building their next-gen solution for finance or healthcare or asset tracking or what have you, that they're too busy to really provide a good end user experience that comprehensively handles the setup of masternodes. Divi is far and above the exception in this case. I don't think anybody has quite as put together a solution as you guys do for spinning up masternodes and having the foresight to realize that people need to set these things up easily if you want to secure your network. So we recognize and kind of, I think, share a common interest in ensuring that it's easy to set up this infrastructure so that people don't have to worry about this. They can just be interested in the financial aspects of it and leave the tech to someone else. We do quite a bit on our platform to make this experience a bit more like what someone might expect in this Web 3.0, whatever you want to call it, era. Simple setup, you come in, you click a button, your masternode is ready. There's really nothing else you need to do from a technical perspective. So having no knowledge of Linux or servers or anything like that is perfectly fine with our platform. We add quite a bit of monitoring and automation and analytics as well. So being able to see your server in real time, is it healthy? Is it generating currency? When's the last time I heard from my server? When's the last time I earned a coin? All of this gets tracked in a dashboard that's easy to access from your cell phone, desktop, whatever. We also do a lot of focus on reporting and tax earnings. One of the biggest challenges that people will soon face as they start paying taxes on their cryptocurrency earnings, especially if you're an American, go taxes, is you owe taxes on all of these assets that you accumulate, at least for now. And they need to be calculated not only at the time you earned them, but for the value they were at the time you earned them. Now, that may not sound too bad until you factor in that many of these masternode coins, you're getting 1 or 2 coins every few minutes, every few hours. Are you really going to sit there with a pen and paper and keep track of every coin you earned at every moment and what it was worth on CoinMarketCap at that time? Hell no. People are just going to guess. And they're probably not going to do themselves any justice. We completely take that part out of the equation. You've got a nice dashboard that tracks every coin, when you earned it, what it was worth, and an annual asset report that you can just give your tax guy and say, here's what I owe. Do yours. We also do automated provisioning. There's no like having to wait around for somebody to go and plug in a machine and turn on your server and get it going for you and let you know when it's ready. All of it's handled in the web dashboard. You just go in and purchase it and it gets set up. You get an email when it's ready, you put in your coins and you're off to the races. And I didn't really bring it up before, but it's an important point to add as well. We are in a completely trustless hosting model. And what that means is that you never send your assets to us. We never ask for private keys or anything. We don't give you special passwords or a console you have to go do stuff on. Everything that you do to stake with NodeForge is done from your own machine, so you control your keys and your assets at all times. Our servers just run in the cloud and do the work for you. And we've got some flexible payment options. Right now, you can use any number of US-based credit cards, debit cards, whatever else. We're also adding cryptocurrency payments in the very near future. So you'll be able to use any number of different coins, Bitcoin and Ethereum and whatever else X shitcoin. There are a lot of them out there that a payment system will accept. So, so I thought I would just give you guys a quick look at our dashboard and where it is. We're in open beta right now. We actually just went into open beta about a week or 2 weeks ago, something like that. So a lot of the stuff is very much a work in progress, but we're pretty happy with where it's at right now. So when you log into our system, you get this nice web dashboard, little animated and whatnot. And it gives you an overview of the nodes that you own, a quick check of if they're healthy and running, as well as your overall earnings over the course of the last day in US dollars. So you can see I'm having a pretty good week here, making 80 bucks a day, give or take, something like that. And then a list of transactions. You can see the last time that you earned something from your node and how much it was worth at that time. You can go to any one node and see some interesting information on that node, the last time that it checked in, the most recent transaction, and even if it's a specialized network, like in this case Nulls, it has a yellow card system for consensus. Don't worry about it too much, but the point is it would be important for somebody that's running a Nulls node. They would want to know this information. We do custom integration for any project that we support, and we really only pick projects that are doing interesting things, so we recently added support for Matrix AI, which does some interesting things with AI and image recognition and those kinds of things. Nulls as well is adding cross-chain support, so you can have dApps that live on Ethereum and other networks at the same time. So we're really looking for those kind of interesting and difficult and challenging projects and integrating them with our platform. And we build all the custom integration necessary to get their product to work with our site. We work closely with their development teams, but mostly it's us. You can see all kinds of interesting things about the individual nodes, like your daily earnings, your daily transactions, and other specialized activity like consensus activity for nulls here, or yellow cards and history. We also have a pretty nice reporting system where you can come in and generate reports. So you can see your earnings for one particular node or one particular currency if you've got multiple nodes of that currency. And it puts them all into a nice table format here, which you can take and export to CSV if you wanted to for tax purposes, or if you wanted to add up and run your own kinds of reports. Makes it super convenient. And then we've got some other quality of life features under settings, like different ways you can receive notifications for earnings or alerts for your node via Slack, or Discord, or email. And we're always adding new integrations with other platforms as people ask for them. And as I mentioned, a variety of different payment methods and systems by credit card or soon to be other cryptocurrency payment systems. So, yeah, that's about it. It's an early look at our platform and how it works. And yeah. Here's a little bit of information if you want to get a hold of us, ask any questions, beat us up, ask us to run a project, what have you. We're always, looking for feedback and yeah, any questions that I can answer for people.
What's the cash out route?
So because we are a trustless model and we never hold your assets, you can cash out at any time. We don't have like a withdraw or anything like that because we never held your assets in the first place. They're all in your wallet. So, if you needed to panic sell your shitcoin, you can do it and you don't even have to ask us or wait or anything like that. We work, and I have a nice little infographic on the front page that I can show there of some of our quote unquote value props. But one of the things that we're pretty proud of is what we call fair pricing. We offer a non-predatory pricing model, which is you simply paying for the infrastructure costs to run your system. So Matrix AI is a great example. They require a pretty powerful server, 8 cores and 32 gigs of RAM and NVMe storage and all that so that they can kind of keep up and run their pretty advanced blockchain. So that's a more expensive server, and it's going to take $120 a month to run that kind of equipment. That price will not go up or down based on the value of the currency. So if suddenly you strap on your moon shoes, you're going because Matrix just hit $5 and you had 100,000 of them. Our price is still $120 and will never change. A lot of people like that because they like to speculate on the value of the currency and not have to pay that currency or some portion of it as a result of hosting their node. By that same token, though, when you set up a node with us, you're effectively running that node for the...
Divi Project, Nick explained a little bit about how technology is evolving and what his project's all about. And then with NodeForge, just kind of circling back and piecing everything together, so we're, a community that's learning and hopefully networking and learning from each other. So I think if, Bob is usually pretty cool about us just networking afterwards, Mike, if you guys don't know Mike Falvey, he is, he loves DigiByte. He has some information here. He'll
stickers and buttons too.
Yeah. Oh, there you go. He's got goodies. So he's got swag for DigiByte. The real Bitcoin, as some say. So business cards right here. Feel free to network, and then we're good to go. Thank you all for coming.